Welcome back to Investing Talk Podcast. Today, we're zeroing in on a company that's been making quite a few waves in the connected operations space. That's Samsara. And its upcoming earnings report, well, it has a lot of people talking. We're going to really dig into Samsara today. We'll look at all the critical details, their history, what to watch for when they report. Our goal, like always, is to equip you with the most important insights so you can feel truly informed. We've pulled together a pretty comprehensive pre-earnings analysis to bring you the key nuggets here. And hey, if you find this kind of detailed breakdown helpful, please do subscribe, like us, maybe leave us a comment. It really helps us bring more of these discussions to you. And if you're feeling generous, you could even consider buying us a coffee. Plus, if there's a specific company you'd like us to look into for a future discussion like this, definitely let us know in the comments below. Okay, let's unpack this and get straight to what you need to know about Samsara's upcoming report. So, for those tracking Samsara, maybe kick us off with the immediate details. When exactly is this report coming out, and what quarter are we looking at?
Right. So Samsara is set to report its Q1 FY26 earnings after market close on Thursday, June 5th, 2025. That timing is 2 p.m. Pacific or 5 p.m. Eastern.
Okay, June 5th after the bell. And what are analysts expecting for this quarter? Specifically, the big numbers, revenue and earnings per share.
Well, the consensus for Q1 FY26 EPS is generally pretty tight. It's hovering right around 0.0620 cents per share. Now, for revenue, it's a little interesting. The Q1 FY26 consensus isn't always directly spelled out in the same way. What people often look at is the company's own guidance for the next quarter, Q2 FY26. And that guidance points to about $371 to $373 million. That's actually a touch above what the street was estimating, which was closer to $369 million. So they're sort of setting the bar slightly higher themselves for Q2.
Okay. So they're guiding a bit above consensus for the following quarter. That's a good nuance. Now, you often hear about this unofficial expectation, the whisper number. Is anything like that floating around for Samsara?
Yeah, the whisper number, it's not always widely available or reliable for every company. And for Samsara right now, there isn't a really strong, widely circulated one. Often, if there isn't strong conflicting data, the whisper might just sit slightly above the official consensus. So if we had to, sort of guess based on sentiment, maybe it's in the $1.08 to $0.10 range for EPS. It just suggests maybe a quiet belief they might edge it out slightly, but nothing indicating, a huge hidden surprise is expected by everyone.
Got it. No loud whispers, just maybe a murmur of slightly higher hopes. So that leads us nicely into their past performance. This is where it gets really interesting, I think. How has Samsara done historically? Have they been beating these analyst numbers? And maybe more importantly, how has the stock reacted?
Yeah, absolutely. And Samsara actually has quite a strong track record here, which is encouraging. So take Q1 FY26, for example. They reported EPS of 11 cents. That was against consensus of just $0.06. So a really solid.
Wow, nearly double.
Exactly. And it wasn't just a one-off. The previous quarter, March 2025, they also hit or narrow faven 7 cents against a 0.0705 consensus. Another clear beat. In fact, if you look over the last 4 quarters, they've pretty regularly exceeded both EPS and revenue expectations. It really suggests they have a good handle on their operations and maybe guiding somewhat conservatively.
Okay, that consistent beat sounds really positive. But what about the stock reaction? Sometimes good news doesn't always translate. Do these beats lead to sustained gains, or is it a different story?
That's a really crucial point. And what's fascinating with Samsara is, while the stock does typically see a bit of a gap up right after the earnings beat, those post-earnings moves haven't always held. You get that initial strength, that quick pop, but then quite often profit-taking kicks in. And you see what's called mean reversion within about a week or so. The price tends to drift back towards where it was, or its recent average.
So a quick sugar rush, but not necessarily a lasting boost right away. Interesting pattern.
Exactly. So it implies maybe a more tactical approach is needed for traders around earnings rather than just buying on the beat and holding short term.
Makes sense. So thinking about that pattern, what do you think causes that? Is it something about the SaaS sector generally, or maybe specific to Samsara? Why the quick pop and fade?
That's a great question. It's probably a mix of things. I mean, part of it could just be the market efficiently pricing in the good news quickly, right?
Yeah.
Investors see the beat, they jump in, short-term traders take their profits, and boom. Also, the broader SaaS sector, like you mentioned, it has faced some headwinds from higher interest rates. That can definitely dampen long-term enthusiasm, even for companies doing well. And for Samsara itself, while they're performing strongly, they're still viewed as a growth company. So some investors might just prefer to lock in gains quickly rather than ride out potential volatility, especially with that high implied volatility we'll get to.
Okay, that context helps. Beyond the immediate beats and these sort of stock gyrations, what are the fundamental underlying financial trends we should really be focusing on in their reports? What tells us about their long-term health?
Right, this gets to the core, doesn't it? We've been seeing continuous improvement in EPS year over year. That's great. And alongside that, margin expansion. So they're becoming more profitable on each dollar of revenue.
That's key.
Definitely. Revenues are also consistently showing high double-digit growth rates, indicating strong market adoption. And critically, gross margins have been stable or even improving. That's a fantastic sign because it fuels what's called operating leverage. Basically, as their revenues grow, their profits can grow even faster because their fixed costs get spread out more. That's really the beauty of a good SaaS model.
Got it. Operating leverage, definitely something to watch. Okay, moving beyond the numbers for a moment, what's been happening with Samsara more broadly this past quarter? Any big news, product launches, M&A stuff that might color the report, or has it been pretty much heads down execution?
Yeah, it seems more like heads down execution this quarter. Our sources haven't highlighted any major M&A deals or, significant product disruptions. This suggests they're really focused on organic growth right now, just enhancing their core platform, expanding its reach.
Mm-hmm.
Samsara seems pretty steadfast on pushing its connected operations platform and growing globally. It reinforces that long-term narrative of just building on what they do best.
Okay, so steady as she goes on the strategic front. How does the bigger picture, the sector and macro trends, how does that play into Samsara's story right now? Is the environment helping or hurting?
Well, connecting it to the broader scene, the SaaS and IoT sectors, they've definitely faced some pressure, mainly from higher interest rates, as we touched on. That tends to make growth stocks less attractive, relatively speaking.
Right.
However, and this is crucial for Samsara, spending on what's considered mission-critical digital transformation. That tends to be pretty resilient. Companies might cut back elsewhere, but they often protect spending on tools that boost efficiency, safety, or are core to their operations. And Samsara fits right into that bucket.
Makes sense. They're selling operational necessity, not just nice to haves.
Exactly. And on the macro front, while U.S. industrial activity has been a bit mixed, the specific areas where Samsara is strong, like logistics and construction, they've actually been holding up better than average. Plus, they don't have huge direct exposure to, say, China or some other volatile international markets, which kind of insulates them from certain global risks.
Okay, so some broader headwinds, but their specific focus areas are proving relatively resilient. Given all that context, how are analysts generally feeling about Samsara heading into this report? Any big shifts in sentiment?
The sentiment seems to be holding pretty steady, generally in that neutral to bullish camp. We haven't seen any major downgrades right before earnings, which is usually a positive signal.
Good sign.
Yeah. In fact, price targets mostly held firm or even nudged up a bit after the last earnings beat. It reflects confidence in their consistent track record and their ability to meet or beat their own guidance, even in this somewhat choppy environment.
All right, let's shift gears a bit and talk about the stock chart itself. What's the price action telling us as we approach earnings? And what are the options markets signaling about potential fireworks?
Sure. The stock's actually held up quite well recently, trading near its highs leading into this report. But what's interesting is that it looks more like consolidation, kind of moving sideways, rather than a sharp run-up into the print.
Okay, so not a huge surge of buying right beforehand.
Exactly. Which can sometimes be a good thing. It suggests expectations maybe aren't excessively high right at this moment. It hasn't run up so much that any minor disappointment causes a massive drop.
Right, less room for a buy the rumor, sell the news kind of reaction. What about the options market then? Put-call ratios, implied volatility, what are they telling us?
Yeah, the options market is interesting. There's slightly higher open interest in calls, suggesting a bit more bullish betting than bearish.
Yeah.
But the overall put-call ratio, which compares bearish bets to bullish ones, it's still pretty close to the norms for the sector, maybe around 0.9 to 1.1, so nothing extreme there.
Okay.
What is notable, though, is the implied volatility. The options market is pricing in a pretty significant move for this earnings event, somewhere in the range of plus or minus 10% to 12%.
Wow, 10 to 12%. That's a big expected swing.
It is. It's definitely above the average for many companies in the sector. It tells us the market anticipates a potentially larger than usual reaction once those numbers come out, whether it's up or down.
Okay, so the market's bracing for a decent move. Given everything we've discussed, the history of beats, the mean reversion, the resilient niche, the analyst view, and this high implied volatility, Can you walk us through the potential scenarios? What does a good report look like, and what would a bad one entail?
Absolutely. Let's break it down. For a bullish case, what you'd want to see is first, top-line growth beating the high end of their own guidance range. That shows strong execution. Second, continued margin improvement. That reinforces the operating leverage story we talked about.
Right.
Third, and this is really key, a raised full-year outlook for FY26 combined with strong numbers for net new customer additions. That signals confidence and accelerating momentum. And maybe a bonus kicker would be any kind of surprise announcement, a new major product, a big partnership that could really add fuel to the fire.
Okay, that's the upside. What about the potential downside? What would a bearish scenario look like?
Right, the flip side. A bearish outcome would likely involve a miss on either revenue or EPS compared to that consensus range we discussed earlier,
Right.
or perhaps even more damaging if the company issues weak forward guidance for the next quarter or the full year. That often hits harder than a small miss on the current quarter.
Yeah, guidance is huge.
It really is. Also, any signs of growth slowing down more than expected, or maybe rising customer churn, meaning they're losing customers, or unexpected pressure on those margins we liked, any of that would likely trigger a sharp sell-off. And finally, if management comes out and specifically blames macro headwinds or talks about customers delaying projects, that would definitely spook investors about the future growth trajectory.
That's very clear. Lots of moving parts. So, boiling it down, if you had to pick the single most important metric for listeners to really watch closely in this report, what would it be? What gives the best pulse check?
That's a great question, especially for a SaaS business like Samsara. For me, the absolute key metrics to watch are net new customer additions and the dollar-based net retention rate.
Okay, why those two specifically?
Well, they're really leading indicators of sustainable growth. Net new customers tell you if they're still expanding their footprint effectively, but the dollar-based net retention rate, that tells you how well they're keeping and growing revenue from their existing customers. Are customers sticking around? Are they buying more services? Are they expanding their usage? A strong retention rate, especially above 100%, shows the platform is sticky and customers are finding more value over time. These two together give you a powerful insight into long-term health and future margin potential.
Excellent point. Customer growth and existing customer growth. Got it. Okay, so let's try and tie this all together. Based on everything, the history, the context, the technicals, what's your overall lean for Samsara's upcoming earnings? And maybe some final thoughts for investors navigating this.
Yeah, okay. My overall leaning here is, I have to say, bullish. Based on that consistent track record of beating expectations, their continued strong guidance in the past, and those pretty solid tailwinds in their specific markets, I think there's a high probability they'll deliver at least a slight beat again. If I had to put a number on it, maybe a 7 out of 10 confidence score for a positive report relative to expectations.
Okay, a 7 out of 10 bullish. What are the main risks tempering that, keeping it from being a 9 or 10?
The main risks are still those broader macro factors. If something shifts unexpectedly in the economy. And also the risk that even with the consolidation, expectations might still be a bit elevated just because they've performed so well historically. There's always a chance they just meet expectations, which, given the high IB, might not be enough for the stock.
Right, meeting expectations might feel like a disappointment if a big move is priced in. So, any strategy thoughts, especially given that plus minus 10, 12% implied move?
Yeah, that high volatility definitely shapes the strategy. For risk-averse investors, honestly, waiting until after the report might be smartest. Let the dust settle. Or perhaps consider strategies like selling out-of-the-money put spreads. That's a way to collect premium, essentially betting the stock won't fall below a certain level. It benefits from high IV decaying if the stock doesn't crash.
Okay. And for those with a higher risk tolerance?
For more risk-tolerant folks, you can look at something like a call spread, betting on upside but capping your risk and reward. Or, given the expectation of a large move either way, a limited risk straddle or strangle could be interesting. These option strategies profit from a big move, up or down, beyond what the options premium costs. They play directly on that high implied volatility.
So option strategies to potentially capitalize on the expected volatility itself.
Exactly. And for long-term investors who just believe in the Samsara story, owning the stock through earnings is still a viable path, given their execution. But even then, I'd emphasize position sizing. Traders especially should definitely size their bets, knowing a double-digit percentage swing is very possible here. Is not the time for an oversized position.
Wise advice. Position sizing is key when volatility is high. Well, this has been a really thorough look at Samsara's upcoming earnings. It's clear there's a lot to watch, especially, as you said, those net new customer adds and the net retention rate. Those really seem critical for gauging their long-term health. And as you think about all this information we've discussed, here's maybe a final thought to chew on. Beyond just the quarterly numbers, what does Samsara's core mission connecting physical operations to the cloud via their platform? What does that really signify for the future? Think about industries like logistics, construction, manufacturing. How essential does this kind of digital transformation become, especially when economic conditions shift? Could this technology ultimately reshape even more traditional industries than we currently imagine? Something to think about. Thank you so much for joining us for this analysis of Samsara. We hope you feel much more informed and prepared for the upcoming report. Please don't forget to subscribe, like the discussion, and leave us a comment with your thoughts, or let us know if there's another company you'd like us to cover. We really appreciate your support, and we look forward to our next discussion.